Hey guys, it is Mark Coe for 4th of April. I wanted to take a look at a pretty exciting market today, the E-minis, and I wanted to kind of continue with the same talk as I did yesterday with the idea of looking at US Open, coming in, looking at the bias, looking at the updated outlook of how we look in the early US Open hours. So to walk in this morning, just to recap, we got some news out of China overnight, and the markets were down. The markets were down big. Just to look at the E-minis here again, this is a fast chart. This is a 10-minute chart. So this is the close yesterday, 3rd of April. We close up near the 2610 area in the E-minis. And overnight, we trade down to a low of 25. 59 and a half. That was the low, 25.59 and a half. So clearly, almost 50 handles off of the overnight close level. So by the time we walk into U.S. session, S&Ps are sitting right on their lows again, negative market. Well, our bias for the morning is still looking negative, right? Yesterday morning we were positive walking in on a Wednesday. We are looking negative market. We're looking at the E-minis to sell it on rallies. And so what do I come up with for levels? Well, let me show you from the newsletter this morning. Here are the E-mini levels. So I have support 25.59. We never touched those lows during U.S. session. The lows were higher. But let's look at resistance levels. This is what I want to bring your attention to. Now, this is all done before the U.S. Markets open at 9:30. This is all well in advance of the beginning of the day. So I'm looking at 2605, 2620, and then the third resistance is 2644. That's the third resistance. So I just wanted to highlight you to those three spots. Let me mark 2644 up here just so you can see 2644. There you go. So those are our three resistance levels. Look how that plays out. So I want to talk about it like this. When we walk in at 8 o'clock in the morning, the bias is to look to sell rallies in the S&P. That is the bias. Everything I do in my approach still takes into account what levels are you dealing against. And so what I have here marked, and I just want to show you how the day plays out. So this is about 8 o'clock in the morning. This is what the screens look like at 8 o'clock in the morning. You're trading just off of overnight lows. This is your first resistance level. And you would look to be a seller into it. But the idea is that once that resistance is broken, there's not another level to look at until you get to this 05. This is all trend, right? Markets can either go trend higher, trend lower, or consolidate and go sideways. This is what's going on here. Trend lower, consolidation, trend higher. So short-term traders, yes, absolutely. The idea was preferred sell on rally. This was your rally into the overnight consolidation zone. That was blown at the US Open, right? That gets through just after the 9:30 open. So you come off that trade. The best part is that around this time, the bias indicator starts to go long S&P, right? But there's not a level to deal against. So from 25.85 to 26.05, there is not a bottom edge to play against, right? The idea is always that even though your bias has changed from short, which was not correct, to long, you still need a level to play against. So I'm going to show you the beauty of this when it actually turns and you still get a level to play against. Now remember, 2605, these are my resistance levels. Again, these were done at 8 o'clock this morning. 2605, 2620, and 2644. Three spots I give. Here's 2605. Here's your touch into 2605. Reaction. Right, so the market doesn't hold, trades above it. So the idea becomes now your bias intraday has changed to a long, a buy and dip preference. That's beautiful. What level do you buy against? Former resistance now becomes support. That means a touchback into your 05, which was resistance, would look interesting for support, right? Look, 2620, remember I was telling you three levels I'm going to show you. My resistance levels, 05, 20, and 44. So the bias now shifts at about 12 o'clock, so somewhere up in here. The bias starts to shift to long side, which means there was no long trade with the bias in here. This was all trend that we didn't take part in. But now again being patient, waiting for levels, pull back to 05, which was on the screens from 8 o'clock this morning, back to 20, gets through the 20, and where does it trade to? It's 3:40 Eastern time as I record this video. This level, look how it's playing out level to level to level. right? And this starts a day where the actual bias to start the day was one in the sell side direction. It just didn't work. And so the key to all this in this approach is that know the levels. Why? Because once you're beyond your level, you're wrong. It's key, especially in the short term, to know where you're wrong. And so when you're marking top edge resistance, albeit at a much lower level, once you get through that resistance, that is now wrong. And so then you would go to look at the next level, which becomes 2605. Again, I hope you guys had a great day. I mean, this was a wild swing in the S&P. Really, the market gapped lower, for the open, but all it was done was bought up all day long. Another thing I wanted to bring to your attention is Aussie dollar. I have not had a trade in Aussie dollar in quite some time, but my model actually went long last night. Aussie dollar at the open. So the trend following model is now long of Aussie. So anybody that looks at Aussie dollar, just heads up. At the open on the 4th of April, the model goes long Aussie dollar. So right here, the model is long. Stops are on a close below 76.48. So a stop will be tight, but it's on a close just beyond that level. Right, so that's what the model's doing. So I just wanted to give a little heads up for the daily model. I know I've been talking a lot about the intraday stuff, but this is longer term trend following in nature. So for 4th of April, I'm Mark Coe. You guys have a wonderful evening, and we'll talk to you soon. Cheers.